This is the FlipNerd.com Expert Real Estate Investing Show, the show for real estate investors, whether you're a veteran or brand new. I'm your host, Mike Hambright, and each week I bring you a new expert guest that will share their knowledge and lessons with you. If you're excited about real estate investing, believe in personal responsibility, and taking control of your life and financial destiny, you're in the right place. This is episode number 377, and my guest today is Brian Meara. Brian and I get asked all the time when the next market will take its downturn. Well, we don't have a crystal ball, and we don't know exactly when it's coming, but we know that it is coming. The truth is, you need to be preparing for it right now. Now, that doesn't mean you should be sitting on the sidelines to wait for it, as it's always a great time to be a real estate investor if you buy right. There are different strategies you can play in up and down markets. But for those of us that lived through the last downturn, well, we learned a thing or two, and we're going to be ready to dominate when the next opportunity pops up. Today, we share our advice on the next market correction with you so we can help you prepare to thrive when it happens. Let's go ahead and get started. Please help me welcome Brian Meara to the show. Hey, Brian, welcome to the show, buddy.
Good to be back, Mike. Good to be back.
Yeah. It's funny, we were just talking about being back. It's been 2.5 years since you were on the show last time. Hard to believe it's been that long, but I'm excited to have you back again.
You know, time flies, man. It's like my mom said. She's like, the older you get, Brian, your mom always gives you this advice. The older you get, the faster time will fly. You know,
that's true.
I just turned 43 last week, so I guess I'm figuring out that's true. You know, mom was right.
I'm 43 as well, so I get it. It's funny too when you have kids. We only have one son. I know you've got a whole herd of kids, but when you have kids, right? When you have kids, you really see it, right? You're like, oh my God, I can't believe. Especially if you use like Facebook memories or whatever they like show you something that happened like 7 years. You're like, oh my goodness, I can't believe that's been 7 years,
right?
Yeah.
My boys, if you remember, I have triplets. I have 3 14-year-old boys who next week are going to turn 15. They're all freshmen in high school, and they all are playing freshman football. So it's like, oh my God, how did I get this old? So.
And they're all going to get their driver's license in one more year, huh?
Yeah. Which means 3 cars. Yeah, we won't talk about that yet. But
that's I don't want to see any tears in your eye today in the show. So. Awesome, man. Well, and by the way, for those of you that listen to this show, if you didn't know, we have another show called REI Classroom, which is they're usually short, like 5-6 minute lessons, and Brian has helped us create a ton of those. So if you go to if you're iTunes or wherever you watch your podcast at, Stitcher, just do a search for REI Classroom, and you'll see a whole bunch of other lessons that Brian's helped us create. So. Cool, man. Well, hey, I'm excited to talk about this today because we're going to talk a little bit about how to prepare for the next downturn. None of us know when it's coming, but we all know it is coming. Some of us that have been around for a long time that learned in the last one secretly are kind of looking forward to it, right? Because we're going to be prepared, so we're going to talk about that today. So. And you've been obviously very much involved in short sales and loan modifications and things like that. So you learned a ton during the last downturn that's going to help a lot during the next downturn, right?
Yeah, absolutely. And like you said, you don't want to ever say, I'm very careful to tell people I'm not excited about it because that, of course, would sound horrible, right?
Yeah. Excited from the opportunity in real estate, though. We don't want anybody to get hurt. We don't want anybody to lose their house. We don't want any of that. But the fact is, that's going to happen whether we want it to or not, right?
You're right.
Yeah.
Exactly, man.
Yeah. It's funny because I'm sure people ask you all the time. People ask me because they assume, hey, you're really active. You know a bunch of people. Like, when's the market going to take a downturn? I'm like, I have no idea. But all you can do is kind of get ready for it, right?
Well, we don't have an idea, but what we do have is data, right?
Yeah.
So if it's really interesting, in fact, I do a lot of reading and online research, et cetera, on this topic. And so I think it was CoreLogic. I can't remember exactly where the source was, but basically what they did, Mike, is they had a chart, numerous charts and graphs showing housing prices and appreciation and interest rates and everything right there.
Right.
And they basically took that chart and then they took another chart with where we are today. So pre-crash, say 10 years ago, and where we are today. And they put them over top of each other. Mirror image.
Really?
We're like... We're right. Yeah, I have to send it to you. We're right at the point where it's like that's why a lot of people are saying in the next 6 to 18 months something's going to go down.
Yeah.
Nobody has that crystal ball, but if you just look at the data, it's kind of telling a story. So
yeah. Hey, before we jump into this topic, for those of you that don't know you that are watching right now, tell us a little bit about your background, my friend.
Yeah, sure. So I got involved in the real estate business, the industry in 2007. Coming off a divorce, I went out and got my real estate license where I lived. And so I live on the border. I'm originally from Jersey my whole life, but I moved across the bridge to Pennsylvania, right about 30 minutes outside of Philly. So I got licensed as an agent with Keller Williams in Pennsylvania and New Jersey. And it's a funny story, Mike. So I don't know if you ever remember me telling you this, but when you're a new agent, what do you do for leads? How do you get your first listing, right? If none of your friends and family are going to list, like, what do you do? So an interoffice email came out. I'll never forget. It said, hey, I have a listing. I don't want it. Who wants it? Just pay me a small referral, whatever. And it came out 3 times. So on the third go around, I'm like, I was insecure. I didn't know what to do. So what I said, I'll take it, raise my hand, right? Well, turns out it was a short sale. So there's a reason, looking back, that over 200 agents didn't want any part of it, right? Because there's nothing short about a short sale. Right. But me being naive, I didn't know any better. So that's my background in that I did my very first deal as an agent, as a listing agent. It took me 9 months. I got it done. But over the course of the next 2 years, I really became the go-to guy for short sales just because I was doing something most people didn't want to do.
Yeah.
And I figured out, like anything, it's just a matter of having systems and the right people in place, learning how to do negotiation, learning how to properly submit the paperwork, and all the different steps to a short sale. And that's what I did for 2 years. Now, right during that time, so if you remember, and depending on who you talk to, a lot of people will say April, May of 2008 was the official crash, but it kind of obviously didn't happen overnight, right?
Right.
It happened over time.
And different times in different parts of the country too, right?
Exactly. Yeah. That's the other thing. You see, it's not like a day. It happened on this day. No.
Right.
But what's interesting, though, is if you go back, Mike, so for those 2 years, people started flipping short sales, that A to B, B to C flips, remember?
Yeah.
Same day closings. Literally, you're going to title or escrow and you're buying here and you're selling here within minutes, right?
Yep.
And a profit. So as an agent, I would be making a few $1,000s for the deal, and I'd see somebody flip it and make 40, 50, 80, 100 grand. Whoa, how do I learn how to be that guy, that girl, right? I gotta learn how to invest. And that's kind of what started me into the investing world,
Yeah, that's awesome. And so, what did you learn during the last downturn? I mean, obviously hindsight is always 20/20, right? But in the real estate business, we know for the most part that that's going to come back around at some point. We go through cycles, right? So we don't know when exactly. It sounds like you got your ear to the ground a little more than I do in terms of timing of what's going on, looking at the data. But what are some of the main things you learned last time that kind of helped you for the next time that we go through that?
A lot of things, man. Just a few things that come to mind. So, I always tell people short sales will never go away. I mean, I'm still doing them now, right? I just picked up 2 new ones last week. Now, like you said, real estate, it's very particular to the market. So because Jersey's like right there, New Jersey is still leading the nation in foreclosures, right? Yeah. There's a lot of reasons for that. There's a very long time frame. It's a judicial state, and so there's a backlog and all that. But that's a different talk for another day.
Sure.
The point is, it's still very heavy, in concentration of your bank-owned homes, your foreclosures, your pre-foreclosures, which are short sales, et cetera. And there's other areas too. Like Houston actually has a lot of them right now. That this was even before the events that happened.
Okay.
But so you just have to know your market, right? But what I tell people all the time is that what the reality is that certain things are never going to change. People are never going to stop, unfortunately, getting divorces, getting sick, cancer, right? Losing their job. I mean, life changes, and then all of a sudden the mortgage can't get paid, and they lose their home.
Right.
And so to be able to come in and do a short sale is it's never going to change, And I think that's where I really realized is that I have a model that it's recession proof. And like you said, when things do take a turn again, that just goes up.
Right.
Because now the cycle continues. But as far as preparing, I think that one thing people can understand is the process of a distressed market. Why do people lose their homes, and what are the choices with a bank? Most people don't understand that to this day, banks, for the most part, truly don't want to foreclose.
Right.
When they foreclose on a home, a lot of people don't understand the concept of how banks make their money, in the sense that with a fractional reserve banking system, they can lend out on a 10-to-1 ratio. So for every $100,000 in deposits, they can lend out $1 million, right? 10-to-1. Well, what happens when you have to take back an asset and sell it as a bank-owned home? That money's not in play.
Right.
And so depending on the type of institution and bank, if you will, if they have a certain amount of that debt, they're actually going to lose the ability to lend further money.
Right. Yeah.
And
yeah.
So there's a lot of reasons that they don't want the house. And so if presented properly to them to sell short, to take a short sale to an investor like one of us, it's what they want to do. But unfortunately, people just don't know how to approach the bank the right way.
Right. So for the agents out there, I'm not an agent. I'm Haven't been, never will be. I don't really need it, right? But there were, and I'm not saying anything bad about agents. Every time I make like an agent like jab, I always have to say, but my wife is an agent, in case somebody's offended. I'm like, well, yeah. I don't know if that helps. I don't know if that gives me permission to, I'm not making a jab. I just don't really need to be. But so the question is, as you know, there were guys like you that truly became experts. And then at one point, every real estate agent effectively said, I'm a short sale expert. Yeah. But we both know that they weren't. And so what'll happen in the next downturn? Because, markets tend to get more efficient. Next time there truly will be some experts that are ready to take this on. And a lot of agents that are like you were when you started, like, this sounds like it's going to be a little more work, but I'll take it on because I need the business or whatever, are going to do that. What efficiencies do you see happening there with agents or even investors that work with agents to pull this off that will be kind of, a little more finely tuned than it was last time around? Are you looking to change your life through real estate investing? If you're interested in either getting started or taking your business to the next level, please check out FlipNerd's private program at theinvestormachine.com. This is the most robust real estate investor coaching, networking, and mastermind on the planet and designed for your success. If you're ready to roll up your sleeves, ready to take personal responsibility for your own success, and ready to dive into a world-class instructional coaching program that provides you step-by-step instruction to help you achieve financial freedom, then you should apply today. Spaces are limited and candidates are only considered after an application and interview process. Our 12-month investor program is unparalleled. Think you might be a fit? Learn more today at theinvestormachine.com. A little more finely tuned than it was last time around.
A little more streamlined, right?
Yeah.
So a couple things. I think that a good tip for any agent out there, and I still am an agent, by the way. It's in referral status. I keep it active, so just because I don't want to let it go, right?
Right.
But I don't list homes anymore, and certainly wouldn't compete with the agents I work with because my primary way of getting business throughout all the years. And so when I created my course, remember I created the course on how to flip short sale. So one of the training modules was basically what I called the realtor referral method. And so to this day, I've never done a mailing, Mike. I've never knocked on doors. I've never done any of the traditional marketing that most real estate investors do because I've always relied on real estate agents for realtors to bring me the deal. So my value proposition to them was very simple. Hey, listen, even though I'm an agent, I will do all the heavy lifting. Most agents, regardless of if they're good at it or not, they don't want to spend all their time in front of a computer on a phone dealing with a bank, pushing paperwork back and forth. So by having built a team of negotiators and attorneys and people that work for me, I have the ability to go to that agent and say, hey, look, you'll never talk to the bank. This is my little slogan. And I'll never touch your commission. Like, let you focus on what you do, which is go get another listing, short sale or not, and I will handle the back end, right? Okay. Which is what we always did. So
because you don't have to be licensed. You don't have to be licensed to work a short sale. Right? I don't know if that's different state by state, but generally you don't have to be licensed to try to work through a short sale, right?
You don't, but here now that's a very interesting point. So certain states, like New Jersey, have very strict laws on the books, these consumer protection laws. Okay, and what they basically state, and it's a big misunderstanding, in that you can't negotiate a debt unless you're a certified debt counselor, you're this, you're that, you're an attorney, you're a mortgage broker, right, a real estate broker. Yeah. But there's a little footnote there. If you are charging the distressed seller. So if you never charge them any money, you can do it. You understand? Because now in the United States of America, there is no law on the books that prevents you from negotiating the best possible price for your own purchase. We're the buyer. Yeah. And we full disclose who we are, what our intentions are. And so as long as you never charge the seller, which a lot of people did and frankly got in trouble for.
Yeah.
It might remember there was all these companies.
Well, the agent commission is not going to you either. It's going to them, right? So yeah.
Correct. So the only profit I make is when I buy and resell the home, which is what investors do.
Yeah. That's cool. That's cool. Yeah, that's good to know.
Yeah. So part two to that question, and what I think that agents and investors alike could do is, there's always people, as we mentioned before, that are going to, fall on hard times and they're going to get in trouble, right?
Right.
And even though in many, if not, dare I say, most parts of the nation, the equity has come back, there's been rapid appreciation of value. The thing that people sometimes I think forget or don't really understand is that a lot of people have really heavily been relying on these FHA loans, right? You're only putting down 3.5%, sometimes with a gift letter, right? So the actual equity in a property really isn't it's not where people think it is. And so if you're right on that line, and a lot of times people will say, well, I owe 250 and it's worth 250, or I owe 240. But what about the closing costs, right? What about 6% to the realtor and the other 2, 3, 4, depending on where you live, transfer tax, all that stuff. So if you're selling a $300,000 house and you're right, you owe 3 and it's worth 3, well, do you have 30 grand to bring to the table? Because if not, you can't do the deal, which means somebody's going to have to get cut short and there's another short sale. So it's not always these situations where, well, it's, I owe 300, it's only worth 2, which we saw obviously during the crash.
Right.
So even what I'm saying, Mike, is that even though the values have come back as they have, there's so many people today right on that cusp where it's a very dangerous situation. And by the way, somebody like that, what the first hiccup that happens in their life, like their wife comes home and says that she's leaving, right? Now there's a divorce situation, or God forbid a child gets sick, or something where the income stops, right? Or separation. What do you do? And that's what people need to understand, agents alike. In that, if you're marketing to the people who are in trouble, and how do you know somebody's in trouble? Well, look, most people go after the low-hanging fruit, right? They're going to wait for the Liz pendants, the public notice, which is generally when somebody's 3 or more months behind on the mortgage, right? Well, I always told people, why not get them beforehand? There's data out there where you can actually reach out to people who are 1, 2, and 3 months behind on their mortgage payment.
Right.
There's list providers who sell that data.
And mail to them, or you could even, a lot of folks are cold calling now, right?
Everything. So, of course, they have to scrub it against the do not call registry. But everything I tell them, from doing direct mail campaigns, which includes handwritten letters, postcards, yellow, it's all the standard stuff we know.
Yep.
Phone calls, where applicable, and you can call them. Door knocking, right? A lot of people are afraid, but one of the best ways to generate leads in that situation is to go knock on somebody's door.
Yep.
If they're not there, have some type of door hanger or something to leave behind. So all the traditional methods that most investors do, just targeting specifically people who are, have fallen on hard times. And here's the thing. We've all been there, at least I know I have, where, you miss a payment. Money got jammed up, especially entrepreneurs, right? People self-employed. You just didn't have the money for your mortgage, so it went unpaid. But then what do? You catch up the next month.
Right.
So that doesn't mean they're losing the home. So we don't tell people, generally, if it's a one missed payment, a 30-day, leave that alone. But when it hits 60 days and someone's 2 months behind on their mortgage payment, they're heading towards trouble.
Yeah.
Because a lot of times with these banks, they won't allow you to catch up if you're 2 months or more behind. In other words, you can't just send in one payment now, like have a rolling 60 or 90. You have to catch up on all the back payments and then all the fees and everything else. And we found that most people just can't do that.
Yeah, it starts to kind of rub salt in the wound ultimately, right?
Snowballs out of control. Absolutely.
Yeah. And it's crazy. I mean, I feel sometimes I forget how blessed I am, but when I look back at some people, I mean, some people truthfully, if you start to look at stats on kind of wealth in America or how much money people have, I mean, I'm not going to say these stats right, but like 50% of Americans have less than $50,000 or less than $1,000 in savings. I think something like most people truly are living check to check, and so something pops up, you get behind on something, it snowballs pretty fast.
Yeah, it really does.
Yeah,
and one of the other things, the situation it's not even necessarily for the people, and I know we were talking about this before, who have no equity, right? It's for people who also have equity, and dare I say high equity, which is a new model that I know we were discussing that I'm doing now, which is the high equity pre-foreclosures. So what we do, Mike, is we basically will target people who are up for auction. And it's so funny. It's such a different twist from what we used to do. We used to tell people, if they would bring us a lead or a deal, hey, if there's an auction date, it's too late. Why? Because let's think about it. Generally, the bank is getting ready to auction it off. And we would get calls, hey, my house is going up for auction next Tuesday. I'm like, dude, you waited a little long for help. You're like, why? Because at that point, an investor-based offer, which is going to obviously not be full retail value, right? Not full market, they're not going to stop an auction for that, for an investor offer. When you start prior to them, when there's no auction set, of course they're going to entertain it more times than not. When the auction set is generally too late, what happens is my attorneys, my staff, everybody have to scramble for a deal that probably wouldn't go through.
Yeah.
Now, contrast that with what we're doing with the high equity stuff. We are actually look for people who are on the auction block next week, next month. What we're doing is we're looking for people that have 150,000 plus in equity, reaching out to them saying, listen, do you want to stay in your home? What do you mean? Well, we're going to pay off your mortgage in full. A couple things happen there. There's no short sale. The bank didn't take a haircut. So when we contact the bank and saying, yeah, we're going to pay you in full, we'd like you to postpone, this auction. Of course they do.
Right.
Because they're getting all their money.
Right.
Now, here's the best part. Here's why I'm doing what I'm doing. First of all, I have to tell you, you would be surprised at the amount of people whose houses are up for auction who have 150,000 plus in equity and they're losing. Now, what happens to that equity? It's gone. They lose it, right?
Right.
Brian, why wouldn't they sell? Why wouldn't they list it with an agent? Two reasons. A lot of times people, when they fall in hard times, they bury their head in the sand. Let's say it's some executive and he's making really good money, right? And he loses his job, but he's got a $4,000, $5,000, $6,000 house payment every month. Can't pay it anymore. Looking for the job, hoping it's going to turn around, right? Trying to get that loan modification, which generally doesn't go through because now there's no income, right? So all these different factors. Don't want to take the kids out of school. We generally see the situation most with families. You know, you're barbecuing with the neighbors in the summer. Halloween's coming up. You're going to go with the kids in the neighborhood. You've made friends with your neighbors. You want to leave your house? That's why they don't list it, because they're waiting to the very last minute to hope something turns around. Right. So when they get that call from an investor like us, who has access to private capital to actually keep them in their home, it's a win-win situation. And we take a small portion of the equity. We certainly let them retain the high majority of it. We just take a small portion of it as our fee. But what's cool about that, Mike, and for me, what's so personally rewarding, every short sale I've ever done, the bank makes them leave.
Right.
They got out. You can't lease it back to them and say, okay, I bought it now. You're going to be my tenant. You stay here. Bank's like, no. They have to leave. And it's in every approval letter and affidavit.
Wow.
You can't keep it there because that's called fraud, right? If you violate the approval. So they have to leave. So although we've done, as a company over all these years, over 1,000 deals, every time, Mike, they had to get out.
Right.
But they don't want to leave.
So the folks stay in their house in this model. You keep some equity. And then when do you get paid? When do you get to cash in on that?
It's really interesting, the model we've created. So what we do, and we perfected this with over 300 deals in one county alone in New Jersey. So it's a model that we're rolling out. But so we use private capital. This isn't for a bank loan, a hard money loan. This is private investors. You know, you take the average guy or girl out there and they have money in a 401k. What are they making? 3, 4, 5%, single digits, right? Low generally. Or worse yet, somebody has their money in a CD making, 1% a year.
Right.
And how would you like a 10 to 12% return on your money secured by real estate? It's the standard pitch for private money. But it works because, see, a lot of these private investors and private lenders are a little hesitant to lend on fix and flip. Well, what if it goes over contract, over budget? What if the contractor runs off with the money? What if you can't sell all this stuff? In this model, there is no what if. We're keeping a family in the home. And you get the deed as the investor. So you want 10 to 12%. Now, here's where this works. It's 2-year money. So 18 months into it. Now, remember, we're leasing the house back to them, okay?
Yeah, they don't own it, right? Because then you'd get not that you don't necessarily want them to own it, but the problem is if you have to go through a foreclosure again in a judicial state, you could get screwed in a hurry.
I'll take it another step. You ready for this? We've thought about it. Not only do they not own it, right? They're staying there, but they're not tenants either. What do you mean? Well, there's no lease, because with a lease they have rights. We use a UNO, a use and occupancy agreement. So should something So should something go wrong, we could change the locks that day. There's no court.
Wow.
So a lot of landlords out there just ears perked up when I said that, because it's a brilliant model. Now, I can tell you over 300 test cases, 303 to be exact, we've only had to do that one time.
Yeah.
These are people, you saved their life, Mike.
Right.
You came in and they're not going to screw you. Trust me. They are very appreciative. And here's the end game. Let me explain this. 2 years later, we will take them to a bank. A lot of times the bank that they actually were getting foreclosed on, and get them a new mortgage. How do they do that? Well, because it's actually a refinance. So what we do is 6 months prior, 18 months in, we will do a quick clean deed, put it back in their name. So now they're seasoning. So they refinance and take out the private investor.
Wow. So they refinance the very same house.
Correct.
Yeah. Wow.
And they get ownership back, and now they own it again.
Yeah. Awesome. Cool. So let's talk a little bit more about what did you learn during the last crash? Like, what are some keys? Actually, not just you. I mean, share some ideas with people that are listening of what you learned that they can use next time around.
So we talked about a few things already. One thing would be the targeting, right? Really learning where to go, like they always say, I think it's that Wayne Gretzky quote, you skate to where the puck's going to be, right? Not where it is. And so understanding that something will happen. Again, none of us have a crystal ball and know when, but we know there will be. And that's the other thing too. People, it's either, there's generally two types of people for the most part. There's the people who think, it's never going to happen again, right? Which is, they're delusional. Because if you track real estate, at least over the last 100 years, there's been a correction of some degree every 8 to 10 years. And again, if you track the last one back to April, or give or take the spring of 2008, well, we're coming up. November is when? Wednesday. So we're coming at a time where it's like, wow, 6 months, we're at the 10-year mark. So the point is this: you have the people who are in complete denial, and then you have the other people who think that the world's going to end and we should all be building bunkers underground, right?
Right.
I think there's going to be a correction, right? Not necessarily a crash, but something will happen. And to know that's going to happen, to position yourself as an investor, as an agent, to be that go-to guy, that go-to girl who has their finger on the pulse. How do you do that? You stay educated. So some of the few things that I could share with your audience here that to keep their finger on the pulse. In real estate in general, I'm going to give you a few resources. These are all free, by the way. You would want to subscribe to a daily email that you get. One of them is called dsnews.com. It stands for DisstressedServicingNews.com, dsnews.com. They have a paid version, but you can get a daily email digest and update. Every day you get an email. And that's specifically on the distressed market. So how do you prepare for the distressed market? You watch and follow the current trends. And you're getting emails with numerous articles every day to literally keep your finger on the pulse.
Yep.
Another really good one that I like is Housing Wire. I don't know if I'm sure you're familiar with that. And they send out 2 emails a day. They have a morning and an afternoon recap. So housingwire.com. These are just a couple different resources that people can, my always thing I always did when I ran the coaching program, when I would train investors, I said, look, keep your finger on the pulse. Wake up, you're having your coffee, read your emails, just go through, see what's going on. Yep. So you really will know as things start to change, right?
Yep, absolutely.
Saw a few articles recently about some values and longer days on market in certain key areas of California. Now that's causing some quote experts to kind of say, oh, could we be looking at the start of something here? But
right.
Like I said, it's good
and
reading.
If you're not in California is always is usually the first to the party. So when stuff starts to happen in California, if you live somewhere else, you could say, this is happening there. You start to expect that to happen maybe in the months ahead.
Yeah, exactly.
Yeah.
They follow the sand states, right? So.
Yeah. Awesome, man. So what can people do to prepare for taking advantage of this stuff next time? We talked about a couple things that we learned, but if folks are newer, especially, maybe they weren't even, some people that are listening right now didn't even go through that cycle. What are some things that they can do right now to kind of get prepared for taking advantage? I'm not saying taking advantage of anybody, but taking advantage of the opportunity that is going to come.
It's funny because it seems like everybody you talk to, everybody has a conflicting opinion anymore about anything, I guess, really, politics, you name it, right?
Yeah.
But so there's 2 different schools of thought with that. A lot of people believe that in acquiring as much inventory as possible, specifically more for your long-term buy and holds, right? So acquiring this inventory. So if things go down, guess what? If you don't sell, it doesn't matter, right? And people are always going to need a place to live. And I can tell you that by working with hundreds of, if not thousands of investors over all these years, specifically during the crash, meaning starting when I was an agent and the first few years as an investor, it was literally split 50-50 because the people who sold at a loss, or they just let it go. And then they come to me and say, hey, I need to do a short sale. Now, a lot of times, don't get me wrong, if tenants moved out and they didn't want to put somebody else or couldn't put somebody back in there were reasons for that. And I understand, right? I didn't really see personally a lot of what they call strategic defaults. But at the same time, the people who wrote it out, they did just fine because look where they are today.
Right.
Maybe if you had planned properly for your certain periods or percentages of vacancy, and again, it comes down to being a knowledge and educated investor, right?
Yeah.
Knowledgeable investor. So it really, I know guys to this day that they're very transactional. So all they want to do is they want to continue wholesaling houses. Nothing wrong with that. Buddy of mine in North Jersey made over $400,000 last year wholesaling houses. Yep. So people think, oh, that's where you're entry level wholesaling. Really, you can do quite well.
Sure.
So, or maybe you're in that fix and flip mode, right? Now that's obviously where things are going to take a turn. If that's your whole business model, how can you get prepared? Well, number one, it's like they say, don't have all your eggs in one basket. And if you're just doing fix and flips and the market takes a really steep turn, well, you're probably going to be in trouble.
Yeah, you get stung. It's funny. I know people, back to your comment on people that were holding. So I know some people that held on to properties and they were upside down. Yeah. I have one friend in particular that had about 30 or 40 properties. He was upside down in all of them. And but he didn't want to, he didn't want to file bankruptcy. He just wanted to suck it up, And so the properties didn't cash flow that well. Lost money in some years, but he hung on. And then this is in a market. This is in Denver, which just has blown up over the last few years. So by the fact that he held on to that, I mean, he made a killing.
Yeah. It's kind of like the stock market. I mean, it doesn't. I mean, unless you're what's your strategy? Are you in this for the long term? I always tell people, are you running a sprint or a marathon here?
Yeah.
I made the decision, back then to become a real estate investor and go full time. I knew this was something I was going to do the rest of my life. It wasn't a little thing just to do on the side, or I wasn't just going to do 1 or 2 houses a year. I knew if I was like everything in my life, if I was going in, I was going all in and never getting out.
Yeah.
You know?
Yeah. Some of the lessons I learned are, just make sure you get financing lined up, because a lot of, I don't know about you. I'm sure that you're the same way. You get I don't know how active you are on LinkedIn. Are you very active on LinkedIn?
It's so funny you say that. I think I'm just about to cross the 10,000 quote, whatever they call it, contact profile, whatever.
Yeah.
And I don't know how it grew this big. I mean, I always accept. So I would, and it tends to it serves up the people that I guess are of interest to you. Like they're in real estate, right? They're in mortgage banking. So, which is really pretty cool. But I'm not as active as I should be. I'll put a post once.
Well, that's okay. I'm not. I'm kind of like you. It's on autopilot. It's there was a time when I used it 10 years ago, mostly before I got into real estate investing, actually, and it's just blown up over the last few years. But honestly, I get a million requests. I probably get a couple dozen requests a day, and it's 75% of them are they say there's some sort of lender. Like everybody and their brother's a lender now, right? They're all private money lenders and stuff. But all those guys are going to go away first, when the market takes a downturn, right? But so, lending dries up. So I started in 2008, and when we went to talk to banks or private lenders, I mean, they would say oh, we don't lend on real estate anymore. Check back with us in a year or two. I mean, it was just it dried up in a hurry. But I think it's important now. Fortunately, I had access to some private capital, and we started doing more and more of that. But I think that's one of the big lessons that I learned is even if you're not doing a lot of fix and flipping, if you want to hold rentals or whatever, is just start to find those lenders now that have been around for a long time, or that there's more of a relationship there. So if they back way out on lending, they're looking for people like you that they know that might still be around, right?
I think that's huge. That's a huge piece of advice. And one of the things I wrote down to say was, all I wrote down on my little scratch pad for our call here was private lending.
Yeah.
I talked about that as it relates to the high equity pre-foreclosures, right?
Right.
Which is what we do. Specifically in the time of a crash or a correction or a downturn, there is not going to be any money. We saw that. You understand? All your hard money, your joker brokers, all these people out there, they're gone. It's over. And then banks aren't lending money. Not that we as investors like to go to banks anyway, but the point is the hard money, it's all going to go.
Yeah.
So about these people, and people tend to forget. They talk about the crash. Well, look what happened to the stock market. And do you know what happens with those people when they're taking losses like that? Where do they want to park their money? Where do most of them still want to park their money today, which is in real estate?
Yeah.
So if you have a stressed market and someone has that where they're making those single-digit returns, and you could show them how to make a 10, 12% return when everybody else is losing money. Because I tell look, the one thing about housing we know, the price go up, the price go down, that. People always need a roof over their head.
Yeah.
And if you position yourself and play real-world Monopoly, you're going to win.
Yeah, and I think more when like you say, people start to pull their money out of the stock market and other places, and I think this has happened quite a bit over the last few years, and will only continue. Is that I think people are just growing more and more distrustful, mistrustful. Which one? I don't know which one of those is a word about the stock market, right? It just feels like it's a shell game, right? So the thing is even if you're not over there picking out paint colors and stuff, which you don't want your lenders to do anyway. I think there's a lot of people that as they get older in life and as they get more and more tired of the stock market, that they just feel comfortable investing in something in their market that is more local to them or somewhere nearby geographically, because they know at least, they have first lien deed of trust on it. So they've got a real asset there. And if they ever wanted to go drive past it, they could, right? People just feel more comfortable with that. Even though they may never drive past it, at least they know they can.
That plus the fact that and how I've always positioned it when I've dealt with private lenders, specifically those that were new to utilizing their money to invest in real estate, is that you get to become the bank.
Yeah.
Like you are the bank.
Right, right.
Think about that. You're the bank. I mean, who doesn't want to be the bank? And so you're in a position, you have an equity stake because as investors, we're not going to present them a deal that exceeds a certain percentage of the fair market value. So should something go wrong, you have a nice cushion for your money. Yeah. Regardless, right? So I think that, people talk all the time about raising private capital, raising private funds, and it's so hard. It's not hard. You just have to learn how to have the right conversations with people to give them the facts, show them why it's such a secure investment. Frankly, in my opinion, the best out there.
Yeah.
And that you're not going to have a problem raising private capital. But to get back to your point, that is one thing that people can do right away to prepare for that downturn. Have access to funding and capital. How many people listening to this, Mike, how many people have, whether it's a spouse, a parent, a very close friend, a relative, who have money in a 401k? One thing I'm really shocked about is people don't understand the natures of investing. They don't understand that you can convert a 401k to a self-directed vehicle.
Right.
Whether it's like one second, got somebody knocking on my window.
That's fine.
They don't understand that, oh, well, and if I take the money out, what about a loan? Because they just don't understand the dynamics of it, right?
Right.
And so to do a self-directed account, to really direct your own future, you're not giving it up. It's going to take a little bit more research on someone's end to get that comfort level. But us as investors, learning how to have those right conversations, showing the value of who we are and what we do, that's where it all works. I believe that's the magic right there.
Yep. And one of the things that I talk to people, I told you I just I had some live events last week where people were asking, well, what's going to happen? When are we going to turn downturn? And one of the things that I think is a powerful lesson if you haven't been through a few cycles is just to know that you can make money as a real estate investor in up and down markets. You just have to shift your strategies, right? Like right now, when it's a seller's market, where I'm at in Dallas is on fire, seller's market, and I do more selling activities. In fact, I'm about to start to sell off a few of my rentals here, some of my dogs that I never thought I would sell, but I can't believe how much I can get for them right now. I was like, I'm going to take advantage of where the market's at right now. And we do more, instead of like wholesaling to traditional investors, I'm doing more of wholesaling on the MLS to maybe end users or whatever, because I make more money doing that. And I think that'll pull back once the market pulls back. But when it's a seller's market, do more selling activities. When it's a buyer's market, do more buy and hold activities, right? And you just have to learn to ebb and flow. I mean, we do this in the stock market, right? You buy, I don't buy anything in the stock market anymore, but traditionally people buy, they think the market starts to get too hot or overheated or it feels like it's starting to get risky, and they sell off and then they move into something they think is less risky. And that's all you're doing is just kind of ebbing and flowing, trying to manage your return and risk, right?
Yeah, that's it, man.
Yeah. Real estate's no different, but sometimes we feel people start to act like it is, like, oh, it's a good time or a bad time. It's like, if you buy it right, it's always a good time.
It's always a good timing. You always make like anything. You make your money when you buy it, not when you sell, right? If you're buying right, if you have the right strategies, if you're able to acquire the property at the right price, whether that's for that, passive monthly income, you're going to do a quick turn, whatever the case may be. One thing also that a lot of people have been focused on, specifically where I'm from, is really incorporating the Airbnb model, right?
Yeah.
We'll always have it's a rental and it's a year-long lease, right? And they pay every month. And then you take it down a notch and you say, okay, well, how do we really maximize this space? It's a single-family residence. How do you really maximize it? Because obviously, single-family, homes, the highest and best use is not really for a rental. We all know that. But there's ways you could change that. Student housing, right? If you live near a college or university, look into student housing. If you're by a destination spot like we are, we have Philadelphia, we have New York. I mean, there's all local areas, Atlantic City, the Jersey Shore, right? And to be able to understand that you can now do weekly rentals and a vacation rental, right? And then the next model, another notch, would be nightly rentals, right? Literally charging by the night. And so it's just a different way to think about it, man. Yeah. It's pretty cool.
Yeah. Awesome. Well, Brian, if folks wanted to get a hold of you, learn more about some of the stuff you're working on, or they thought, man, that guy sounds so cool, how do I find him? Where do they go?
You make it sound cool on the show. That's cool. Really just my website, Mike, just investorentourage.com. The only thing from when I was selling the course, which I'm not selling it anymore, on short sales, I had a deal analyzer. So for anybody who's interested in learning about how to analyze a potential short sale, or maybe you think you don't need it now, but you will in the future, it's one of the training modules from the course. So it's a video, it's a downloadable audio, it's a spreadsheet, it's an actual calculator. So you can download that. I think it says right at the top of the page or whatever, it says put your email in for a free deal analyzer. Cool. And that's just investorentourage.com.
Awesome. Well, we'll have links for that, DS News, Housing Wire, all those things we talked about down below the video here. And great to see you, my friend. Thanks for sharing with us today.
Thanks for having me back, Mike. Hopefully it won't be another 2.5 years before I come back again.
No, absolutely. That's way too long. Okay. Awesome. And again, guys, if you want to hear Brian drops a ton of knowledge out, whether it's on Facebook or on his website, or as I mentioned, he's been involved in quite a few of our REI classroom lessons. So if you go to flipner.com, I don't even know what the link is. Somewhere on flipner.com, if you go to /shows, we have our different shows there, but also on iTunes and stuff, you can check out REI Classroom, and Brian's done a number of lessons for that podcast. So everybody, this was episode number 377 with my buddy Brian Meara. Appreciate you guys. If you could, go out to iTunes, Stitcher Radio, Google Play, wherever you watch your podcast at or listen at, even YouTube, and subscribe and give us a rating. We'd appreciate that. I thrive on that stuff. I get energy from other people letting us know that they like what we're doing here, because we're working hard to create 377 episodes of this one. Actually, the REI Classroom, Brian, I think we had over 700 episodes of that one. So we've got a lot of shows. Yeah, we've been cranking them out for you guys out there. So appreciate you giving us some love back. We'll see you on another upcoming episode. Everybody have a great week. Take care. Thanks for joining us for this episode of the FlipNerd.com Investing Show. If you're not yet an elite member of FlipNerd, you're missing out. We have tons of great training, including a new detailed masterclass published each month and live training webinars with experts twice a month. Plus, you'll get access to all of our archives, where we already have a growing library of masterclasses and other training videos. Elite members also get membership in our incredible online Mastermind group, where many of the top real estate investors from across the country, including many of the hundreds of guests I've had on the show in the past, are already members. Whether you're brand new, looking to get started, or a veteran, you simply must join today. I promise you won't be disappointed. To learn more or join today, please visit flipnerd.com/lab. That's flipnerd.com/lab. See you on the next show.